Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Friday, July 25th, 2014. There's a lot to cover tonight. I'm going to do things a little bit different. It's going to be a little bit longer, but I'm going to give you some investigative evidence, if you will, of what I'm seeing out there across not just our market, but markets in Europe and a few other things. And we're going to start to build the evidence so you can see some of the other things that I see on a daily basis that I don't necessarily talk about in these videos, but I certainly monitor in terms of my own technical analysis and the reasons why some of the trade alerts go out to the members. So what I'm going to do tonight is just briefly talk about the Spider, and S&P was down just under 10 points today. It was down a little bit more earlier, but basically, you know, it was a little bit nice of a down day, if you will, but the volume wasn't there. What did we have? We had 56, almost 57 million shares. It's really not enough to push the market anything significantly lower. If you look at the 10-minute chart, the market went straight down at the open. Made one of these sideways patterns again, came down, and then basically went sideways the rest of the day, and it made another, you know, basically a bearish pattern. So Monday morning is going to be important in terms of the direction of the market. And if we look at the 60-minute chart, you know, this is another bigger reason why, if you will. You know, you have 1, 2, 3, 4, 5. You know, you basically had five 60-minute bars here. So for 5 hours, the market basically went sideways, and that could mean, you know, another within the first hour, I think, is going to be important if we're going to head lower to this 200 moving average and see what happens from there. That's the 200 period moving average on the hourly chart. All right, so let's get into some other evidence. Let's go over to the gold chart, because gold, it was interesting today. Gold was up. And then that's the 60-minute chart. But let's look at the daily chart first, and I'm going to come back to that. Okay, gold was up today, and it kind of got stronger throughout the afternoon. In fact, yeah, you can't really see what I'm going to show you here. Let's go back to the 60-minute. So today, well, actually, it started yesterday. Yesterday, we started going up at the end of the day, and then it continued today. Okay, and then just at the end of the day, it continued even farther, and this looks like we may get a breakout here. It's possible. I'm going to take a close look at gold over the weekend, and I'm going to act accordingly for the members. So we'll leave it at that for now. But gold made an interesting move today, and then at the end of the day, both yesterday and today. So that's a tell for me. It tells me that the smart money is coming into gold. Usually the smart money, which is the large money, which is the institutions, the banks, the investment firms, usually they're doing a lot of their trading at the end of the day when they're serious about a position. So the reason why this is an important tell for me, I just want to go back to a longer term chart here. The reason why it's an important tell for me is because there's a lot of other things happening, specifically in Europe, and I'm going to go over some of the European indexes in a minute. And what I think is happening is Europe's kind of melting away. That's another tell. It's part of the evidence. It's part of my portfolio of evidence I'm building to where I think the next move and direction of the market's going to go. So if Europe's melting away, they've already lowered interest rates to negative, right? Well, if we see a further effort at money printing, whatever their version of our QE whatever is, whatever they want to call it, that could cause some certainly will cause some inflationary discussions, and then that's why I think gold is getting ready to blast off, because the people that buy gold, the institutions and the people that buy gold, are sniffing this story out, if that's the story that it's going to be, because gold is either going to go up, in my opinion, for one of two reasons in the next move. It's either going to be an inflationary discussion, or it's going to be a safety discussion, and that could mean something totally different, which it could mean the conflicts that are going on around the world could begin to escalate, and that could certainly cause a lot of people to run into gold, and that's a distinct and close possibility right now. You have a lot of things going on. You have Eastern Europe, and then you have the Middle East, and it's really a mess. And why not? I'm sure North Korea will stir up something sometime soon. So all these things floating around could certainly be the reason and the catalyst to move gold higher. So we're getting to the point where we're going to need to buy some gold. So we'll just leave it at that for now. All right, let's move on to another piece of evidence. All right, so now we're going to go to the EEM, which is the Emerging Markets Index. And the Emerging Markets Index, if we look for a piece of evidence, we're not finding it. Very strong. Okay, let's go to a longer term chart. All right, weekly chart. Very strong. Maybe it's going to make a double top right here, and that could be another piece of evidence. If we see a pullback from this double top, we're kind of at double top. And if we see a down move from here, taking out this green candle here, then that would be evidence that this is breaking down. But right now, it's a strong market, and there's no evidence telling us it's going to get weak anytime soon. So that being the case, we're watching it, but you may hear if other markets start to roll over and EEM remains strong, you will hear the media begin to say, well, everybody's running to the emerging markets because of the growth and all this stuff, and that's fine, but eventually it'll roll over too, because we're going to end up in a global sell-off is what's going to happen. All right, let's go on to the next piece of evidence. Let's look at the FEZ, which is the European equivalent of the Dow Jones. Okay, it's the Euro Stoxx 50. So the FEZ, okay, looks like it's weak, right? It already rolled over. Now, if you compare the FEZ, which is the Euro Stoxx 50, to, for example, the Dow Jones average, okay. Now the Dow Jones, while it had a down day today, 128 points or 123. That it's still in an uptrend and it's still a strong market. It's specifically relative to the FEZ, which is Euro Stoxx 50, very weak. Now let's take a look at a longer term chart. So here's another piece of evidence. Okay, this is rolled over. Now while the US markets were continuing up, okay, the European markets were rolling over. Okay, that's a tell. It's meaningful because we always talk about a global marketplace, so therefore it becomes all the same market. If Europe, the US, and Asia can't all experience economic prosperity together, we're going to experience the opposite together. If one market sells off, there's so much interdependence, and it's not just the economic interdependence, it's the market interdependence. When stuff gets sold, it all gets sold, and it becomes a self-fulfilling prophecy, and it all goes down together. And that's what's been happening over the last, let's say, 15 to 20 years, as opposed to when you actually made investments based on fundamentals. Now it's all the same market. So you just need to be aware of that. It's a piece of information. It's nothing to trade off of. It's just evidence. All right, let's move on. Let's talk about another piece of evidence. And let's see, on my list of items is Deutsche Bank. I've talked about this one a couple of times. Very, very weak. That's a weekly chart setting up to go lower. Okay, look at the daily chart. I mean, this is an ugly chart. Okay, this is a large bank in Germany that has rolled over and is experiencing trouble. And this stock, if we even take a longer term look, this stock is destined, in my mind, for a double bottom down here at, let's just call it $21. And from there, we'll see what happens, but that's a long way down. That would not be good for Europe, and that will happen during a global sell-off. Let's look at Germany, the ETF for Germany, and compare that, okay? Now, Germany doesn't look like Deutsche Bank, okay, although, okay, we're still not even close to taking out this top here on a monthly chart. Let's look at a weekly chart. Okay, rolled over. Kind of looks like some other European indexes we just looked at. Well, I want to go to the daily chart. Okay, daily chart rolled over while the S&P was still going higher. Okay, very interesting. That's a piece of evidence, right? Let's look at a couple more pieces of evidence. Let's go back across the pond back here, and let's look at the transports. All right, that's always a good market indicator. The transport's still strong, still in an uptrend. Okay, if we're looking for a piece of evidence here, we're not finding it. Here's a weekly chart, very, very strong. Nothing wrong with this transports index here. Absolutely not. So you don't find the piece of evidence there, but we keep our eye on it and we keep looking. And so, all these things are going to come down together, but they don't all happen together. They kind of happen in a sequence. It's really linear in terms of markets selling off until they catch up with each other, and then they fall off the cliff together. That's the way it kind of worked before, and that's the way I see it unfolding here. Next piece of evidence. Let's look at the... I'm looking for SMH. I don't see it here. Let's do it. Let's talking and typing. Here we go. SMH is the ETF for the semiconductor index. The semiconductors, well, it's still in an uptrend, but it rolled over. Okay, and we kind of pierced this low here today down at 49.09, and today's low was 48.93. What was this again? Yeah, 49.09. Okay. Oh, that's a weekly chart. That's why it looks strange to me. I apologize, folks. Let me go over to daily chart. Yep. Okay. So this, if this SMH breaks this area here, you're going to look for this, first target down here. You're going to fill this gap. It could keep going lower. So SMH, the reason why we look at the semiconductors is because the semiconductors is usually a leading indicator to the market, just like the transports are usually a leading indicator to the market, but we're not seeing any evidence there. We're starting to see some evidence in the SMH, but there's no real valid case why it's not in a downtrend yet, so we have to wait. What other pieces of evidence did I have lined up for you? Yep, one more. We're going to take one more hop across the pond. I'm going to look at Russia because since that's one of the geopolitical hotspots, what do we have here? Well, look what we have. How many times do we see this time and time again? We have a big down move, and then we go sideways for a while. And then when we go sideways for a while, what happens? Well, we usually go back down farther. So that's that market symmetry. A down move, sideways, down move, okay? Remember? A, B, C. That's an A, B, C or an A, B, C. Same thing. So here's an A, B, C. So the RSX, which is Russia, is setting up to go lower here. You have a conflict with Russia and the Ukraine. Certainly nothing's close to being resolved. We're not getting anywhere. We really have no business over there other than we like to stick our nose around, but we obviously can't impact or influence Putin over in Russia. He's going to continue doing what he's doing, and I don't know what we can do about it, but nevertheless, it seems to be getting worse. The Middle East seems to be getting worse. Gold seems to be picking up pace. These European markets seem to be selling off. The U.S. market, we know, is teetering in a cycle turn period. Okay? All these things are pieces of evidence that we need to pay attention to. I am paying attention to them. That's why I want to offer them to you. So for that, I think we're going to give it a wrap tonight. We'll see what happens next week, and we'll keep our eye on the ball, eye on the markets. This is David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Thanks for tuning in.